Hi friends, this is Kishore. Welcome back to my channel. Today I'd like to cover market index analysis, bonds and yields analysis, gold, crude and dollar index analysis, CPI, PPI and Fed watch tool, last week bank earnings, next week economic calendar and next week earnings. This is not a financial advice, just for knowledge purpose only. Let's jump into the show. CN and fear and greed index, it came to the neutral. We know that last 6 months it is in the greed and extreme greed level. Weekly heat map, most of them are red except Apple, Google, and Tesla. We know that Apple was down more than 10% last week and now it is bounced back. And this is weekly heat map for the ETFs. Most of them are down. Only the inverse ETFs and also the volatility ETFs. Little bit of precious metals. And this is weekly sector performance. All sectors are red this week. Especially financials hit very hard because of that CPI PPI data. There is a less chance of the rate cuts in the month of June. And this is war came on Iran and Israel. This spooked the stock market and also the few commodities like gold. My first target is 21 2461. The next target is 2793 in the gold in the monthly chart. And on Friday it hit 2431 and gave up a lot of gains and ended up the 2344. If war continues, then there is a high chance gold can go up still. But if war pauses, then that is good for the economy and but the gold price may go sideways or the down. And the TLT, the bond market, so TLT came back to the 89 levels, near to the 89 levels, and a little bit jumped to the 90 level. And this is crude oil hit 88 level with the war and then gave up some gains and ended up the 85.88 level. And the CPI data came back worse than the expected one. And we talked about this Baltic Dry Index and also the retail gasoline prices last week, and we expected as there is a chance of may come along with the forecast lines, or there may be a chance of higher than the expected one. So this CPI came more than the expected one, and the stock market was dumped. And this is you can clearly see here the month on one came along like, same as the last month, but error is little bit increased. And this is the some of the factors in the CPI. Medical care services, it jumped from the Feb to March like minus 0.1 to 0.6 level. Used cars helped like to come down from 0.5 level to the minus 1.1. But energy last month it is 2.3, and again it is now also it is like 1.1. There is a no reduce in the energy levels. And also the PPI data, it came less than the expected one, but still there is a high chance because of the crude and war. There is a high chance the next time the PPI may come higher. And this based on the CPI and PPI data, Goldman Sachs said we are pushing back our forecast of the first rate cut from the June to July. So we talked about this in the last week call and mentioned there's a low chance of the rate cuts in the June and there is a high chance of the rate cuts in the July. And this is biggest story of 2022 2020. So the bond market is almost like 65 years low because of this inflation and the war or whatever. So the bond market is dumped like anything. It's almost like 65 years low. And this is TNX daily chart. It on CPI data date, so it went up like anything and gave a little bit of gains. Right now it's just about 0.618 level. If it stays about like this level, then there's a high chance it can go back to the 4.7 level. And this is next week. Next week economic calendar on Tuesday, Jeremy Paul going to talk. So this is one of the key factor to the stock market when it based on the CPI and PPI data. And also the Wednesday there is a Fed based big release, and also on Thursday existing home sales data release. And S&P 500 is heading for a rough patch as buyback blackout tariffs. As the earnings season started this week and next 2 weeks, there is no buybacks for the S&P companies. And the biggest Wall Street lenders outpace S&P 500. So in October, the CPI came better than the expected, and everyone talked about the inflation is over, and there is a very high chance of the rate cuts, 4 to 6 rate cuts, and banks are jumped from October to the last month. It's almost like 30 to 50% up. Now there's a as there is inflation is bounced back, though we need to see like how the banks perform the next 6 months. And last week, JP Morgan, Citigroup, Wells Fargo, BlackRock, State Street, they gave their earnings little bit of mixed one. There is no clear direction of the doing good or doing bad. And then the next week we have few more banks really like Goldman Sachs, Morgan Stanley, and one more bank is also there. Yeah, Bank of America. So these three banks are releasing the next week. So it is a little bit focused on this one. And also the United Airlines, as crude oil is increased, I would like to focus like how the United Airlines has doing. And also Dr. Hutton, it was down a little bit. So need to see whether it is a bounce back at this levels or based on the interest rates. So there's a low chance the high like there's a low chance of the they give the high guidance. And also the PNG, they're going to release the results, and the chart is very good level. Like right now it is at the previous support and resistance levels under the Fibonacci level of 0.382 level. And also if you put the anchor wave up to the 142, it is comes around 155. So if it bonds here, then it can go up to the 158 levels. If it dumped here because of the earnings or whatever, there's a support at the 153 level. And also Bloomberg US Treasury total return unhedged USD. I use this one as a monetary index. And we know on October it was bounced from the lows to the highs in the till February. From February it is going down. So the money is going out of the stock market. And this is the largest outflow from the US large caps fund since December 2022. This chart says like the inflow or outflow of the large cap stocks. Right now it is like a lot of outflow from the large caps. And this HYG, I shared this chart 2 weeks back, and I mentioned when HYG is going sideways and market is going up, if the stock goes down, if the bonds well goes down, then the high chance of the stock market goes down. So it happened in previous, and now also it is happening the same. And this is the number of percent of stocks in the S&P 500 200 above their 200-day moving average. It hit the 82 levels, and I talked about this 2 weeks back. It is almost like January 2020 levels. So now last 2 weeks it is going back down right now to the 69 levels. And this is the SPY weekly chart. So last 2 weeks it is down and the volume is up. So there is a little bit more downside pressure still continues. And this is a daily chart. And Friday volume is up with the war and with the war news and all. And little bit it came down to around 508 or 509 kind of thing, and then a little bit bounced and it closed at the 510 level. So there is a high chance it can hit again the 20-day moving average like 518 level, and then retrieve and come back to the 503 levels. And the QQQ weekly chart, it is going on the sideways from 430 and 447 levels. It's going on sideways, and the on Friday on last week this volume is up, and the CCI is going down. Still a lot of downside pressure is there. And the daily chart, it is forming a symmetrical triangle kind of thing. Right now it's the bottom part of the symmetrical triangle, so there is a high chance it can go up and then come back and the spook. And the IWM weekly chart, because of the CPI PPI data and rate cuts pass, I mean rate cuts from moved from June to July kind of thing, it is going down with the high volume. And it's a daily chart. So right now it is in the oversold region. The CCS is oversold region, so there's a chance little bit of bounce from here and then down. And this is a Dow Jones stock chart. Right now it is a very close to the 1.618 level, 377, and also it is the previous support levels. So if it comes here and bounce, then that is good for the Dow Jones. Otherwise, it can give up and it can come back to the 370 levels. And this is meanwhile three of the most economically sensitive industries. So these are the three industries like semis, home builders, and transport. So they help the stock market to bounce back like anything from October lows. So now it is they are coming down. So if the channel is breaks and goes up, that is good for the stock market. Otherwise, there is a high chance the stock market can go down. So the summary is inflation turned tailwind to the headwind to the market. We know that on October the inflation is over and all that stuff, and it made the tailwind to the market and market bounced. Now again the inflation is back. Now it is becoming headwind to the stock market. War spooks the market. As war came again, war started between Iran and Israel. So if it continues, then it's not good for the stock market at all. And both inflation and war amplified the volatility in the market. We see that one day stock market is going down, one day is going up. So it's a lot of volatility in the market. Rate cuts are moved to July. Based on the Goldman Sachs analysis, they are saying the rate cuts may not be possible in June. There is a high chance on the July. And Jeremy Powell's speech is key to the market. And Tuesday we have a Jeremy Powell speech that is very, very key to the market. Like I'm very, very curious like what he says on that day. So that's all for today. Hope you like this video. If you like this video, please hit the like button. Please watch more videos in my channel. Please subscribe if you like them. Please share this content if any of friends looking similar kind of content. Please hit the bell icon so that you'll get notification when I upload a new video. Thanks so much. Bye bye.